What's up, everyone? It's Caddy with Money Investing. So in this video, we are going to be talking about Square, in other words, Block, and they did report their earnings after the markets closed today, and they popped a little bit over 8% after hours, after beating on a revenue, missing on EPS, but also beating on gross profitability. So we're going to talk a little bit about this company. I'm going to go over the revenues, the earnings, the cash flows, the valuation. We'll talk about everything. And as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel and also share this video with your family and friends who are invested in Square or might be interested in learning more about this company. And the link to our Discord and Patreon is going to be down below for a 16% discount on an annual basis. Make sure that you do check that out and join before the end of this month. So Block nearly up 8% in extended trading after payments company reported fourth quarter earnings that missed Wall Street expectations but posted strong growth in gross profit. So EPS came in at 22 cents. That was expected, 22 cents versus the expectations of 30 cents. And revenue came in at 4.65 billion versus 4.61 billion. However, the gross profit was up very nicely, at 40% year over year to $1.66 billion. And analysts were expecting 1.53 billion. So a very strong beat for Block, and this right here was the big pop after hours for the company. Now going over to some of the numbers here, let's just quickly break that down. So $1.66 billion, 40% year-over-year growth, and even sequentially, so quarter over quarter, growing very nicely. And net loss, again, was $114 million, so the company is not profitable, and we'll go over the income statement in just a minute. But the real bright spot for Square is Cash App. Cash App is growing like insane. Just like Venmo is growing like wildfire, so is Cash App. And they're pretty much the payment processing and peer-to-peer payment systems for both of these fintech companies. And Square's gross profit, $801 million, and that was up 22% year over year. And Cash App gross profit, another $848 million, up 64% year over year. So you can see how already the massive growth that's coming from Cash App. This right here is going to be the entire 2022 metrics, and 36% growth in gross profit, up almost to $6 billion. And Square's gross profit was $3 billion, getting up to 30% growth. And look at Cash App. It's insane how quickly this thing has scaled up. And it's now at almost $3 billion, pretty much equivalent to Square, growing 43% year over year. But for the entire year, the company still generated a net loss of over $500 million. This right here is going to be their gross payment volume mix by seller size. So again, every single seller size is growing, whether it's less than 125,000 analyzed payment volumes, between 125 and $500,000, or over $500,000 in analyzed GPV. Every single one has grown to now combined over $48.6 billion in gross payment volume in 2022 fourth quarter. This right here is going to be Cash App Card gross profit increasing as a percentage of mix. So 26% is going to be that total gross profit as a percentage. And Cash App gross profit is pretty substantial. And Cash App Card gross profit also growing. So in other words, Cash App has been growing pretty nicely. So this right here is going to be their actual income statement. So what you'll notice here is the transaction-based revenue for the company growing really nicely from 3.2 billion in 2020 to 4.8 billion in 2021 to $5.7 billion in 2022. So pretty decent growth. Hardware revenue, $91.6 million, $245 million, $264 million. So pretty decent growth, modest growth, nothing to write home about. And Bitcoin obviously down. It was at $4.5 billion, and then 2021, because of that Bitcoin spike and all that euphoria, it rallied to over $10 billion and then declined to $7 billion in 2022. But the main key takeaway here for Square is this right here: subscription and services-based revenue, because this is a high margin business for the company. And as a result, you'll notice that they have almost doubled that growth year over year from 2.7 billion to over 4.5. In fact, from 2020, 1.5 to 2.7, that was alone about 80 to 90% growth. And that 2.7 to growing to 4.5 billion is another 70 to 80% growth on a year-over-year basis. So pretty substantial. And as a result, total revenue are pretty flat from a year-over-year basis. So they haven't really seen a lot of growth because whatever increase they saw in subscription-based revenue was offset by the loss in Bitcoin revenue. And to me, I would rather have it this way. I would rather have them grow the subscription and service-based revenue as opposed to Bitcoin, because the margins are really, really low for Bitcoin revenue, right? So if you take a look at Bitcoin revenue at $7.1 billion over here, and then you compare that to Bitcoin cost, it's $6.9 billion. They're really making no money on Bitcoin. I don't even understand. I mean, to some extent, it is there to attract more users and customers. So I understand from a marketing ploy, but they're really not making any dollars from Bitcoin. What their real business really is about is transaction-based. And even transaction-based is pretty high expense, $3.3 billion. The main business for Square, which, I've done a couple of videos in the past, from a couple of years ago, we've talked about Square's main model is over here. That's the second line item, subscription and services based revenue. If they can actually scale this up to a level where it's making 10, 12, $15 billion in revenue, this company is going to do really, really well. I mean, subscription and services based cost is $861 million. If you do the math, 861 divided by 4552, that's only 19%, meaning about 81% is gross margins for the company for services and subscription based revenue. Whereas if you combine transaction based, 3364 divided by 5701, 60%. So only 40% gross margins in transaction-based revenue. And Bitcoin, I'm not even going to try. 6956 divided by 7112, 98%. So their gross margins on Bitcoin revenue is 2% versus their gross margins on subscription and services-based revenue is over 80%. You see the big difference? This is where their focus needs to be, and it looks like it is, because they have been able to grow this revenue pretty substantially. But once again, they're spending a lot of money on operating expenses. So even though their gross profit was very nicely up to 5.9, almost $6 billion from same time last year, that was a growth very well, 30 to 40% growth. They're still spending a lot of money, right? So product and development, $2.1 billion. That's up from $1.3 billion. Sales and marketing, over $2 billion spend. General administrative expenses, $1.6 billion spend. Transaction loan and consumer receivable losses, $550 million. Total operating expenses, $6.6 billion. And as a result, they are generating an operating loss of $624 million. And not to mention, that's also going to trickle down to their bottom line with a net loss of about $553 million for the company. So that's where we are. Square, in my opinion, is again a phenomenal business, and they're able to grow their Cash App so well. Subscription and services based revenue is growing really nicely. However, the execution is still lacking on the bottom line. So they still need to kind of work around some of these expenses because of the fact that they're not profitable yet on a GAAP basis. And of course, they're generating a pretty substantial loss for shareholders in the tune of negative almost $1 per share in negative losses, and diluted shares outstanding 578. So they have been diluting shareholders in the last couple of years. So they've gone from 482 million to 500 million to now 579 million shares outstanding right now. When it comes to the balance sheet is actually really good as well. If you take a look at the cash and cash equivalents, they're sitting on 4.5 billion. Investments in short-term debt securities sitting at about $1 billion, so we're sitting at $5.5 billion. And then long-term investments in debt securities sitting at around $500 million. So when you combine these two numbers, we're sitting at around $6 billion worth of cash and short-term and long-term investments and marketable securities. And then if you take a look at their long-term debt, which is going to be over here, sitting at about $4.1 billion. So they've got more cash than debt on the balance sheet. They've got more assets than compared to liabilities. And they've also got more current assets compared to total liabilities. So total current liabilities. So bottom line is the balance sheet is still fantastic for Square. Net debt is negative. Cash to debt ratio is over 1. And this right here is another really interesting piece for Square, which basically goes over the subscription and services based revenue and how well it's growing. And it's kind of like a breakdown between Cash App and Square. And if you take a look at the year ended December 31st, 2022, the subscription and services based revenue is pretty much broken down into Cash App and Square. And man, oh man, take a look at that Cash App revenue, $3 billion. Absolutely insane. And this right here is going to be the revenue ending in December 2021. So this is 2022. This is 2021. And take a look at that comparison. from 1.9 billion in Cash App revenue, they've been able to scale that to over $3 billion, and Square from 664 million to over 1.3 billion dollars. So absolutely phenomenal numbers, especially for Cash App. Bitcoin obviously down from 10 billion here to down to 7 billion, so I don't really care too much about that. And transaction-based revenue for Cash App from 490 to 466 million dollars, and then Square from 4.3 billion to 5.2 billion. So it's really transaction-based revenue is on Square. I think a lot of enterprises and businesses use that, but Cash App is going to be more peer-to-peer, more individuals, more users using it. And as a result, the subscription and service-based revenue is phenomenal, and the growth is just staggering for this company. However, we come down to execution here, and earnings per share, still negative about $1 per share on a GAAP basis. Non-GAAP, maybe they did make a profit. However, this right here is going to be the consensus from analysts moving forward. They're expected to grow earnings from $1.12 per share all the way to over $4 and all the way up to $5.65 for Block moving forward, all the way through 2028 and 2030. So if we plug those numbers in to our formula over here, we're looking at a compounded annual growth rate of about 23%, 23, 24%. And then on a 8-year basis, we're looking at 22.4%. So this right here is going to be that compounded annual growth rate for Square over the long term. So for 2023, I'm just going to price in $1.73. They're pricing in $1.77. So that's what I'm assuming Square is going to be able to do. And then I'm going to plug in 20% as a growth rate. And then I'm going to do 12% discount rate, 10% margin of safety. I'm going to do 1% share dilution because they have been issuing more and more shares over time. So I'm assuming that they're going to follow that same path. And a PE multiple, which if you take a look at right now, the price to earnings multiple for Square is actually negative, right? Because they've got negative earnings per share, negative 93 cents per share in EPS. So we don't have a price to earnings multiple. However, the market cap for Square right now is trading at about $45 billion. Consider $45 billion after the spike that we saw after hours. And the revenue overall for the company was $17.5 billion. So 45 divided by 17.5. Square right now trading at 2.5 times sales, which isn't really bad. It's actually quite reasonable in my opinion. But again, we have to understand that the margins are a bit of a mix between Bitcoin and subscription and transaction base. So their overall actual net gross profit margin was 6 divided by 17.5, and we're looking at 34% in gross profit margin. If that number increases, sure, they can demand a much higher price of sales. But right now, I think with the 34% gross margin, that's a bit of a mix between Bitcoin and hardware and subscription and transaction. I think it's quite reasonable. Maybe they can get up to 3 times sales. And then if you compare that to gross profit, right? So 45 divided by 6, we're looking at a 7.5 times gross profit, which is actually quite reasonable. It's actually on the low end of a gross profit multiple. We don't have a net income, so we don't have price to earnings multiple to begin with. So what I'm going to do is I'm going to keep that reasonable at around, let's say 20. Let's just start with 20, maybe even lower at around 18. And we get a fair value around $37. If you go with 20, we get a fair value about $41.84, and the price after hours trading at $80.60. So we're going to go up with that number. So this right here is going to be some estimate of that analysis with a 20% growth and a 20 times PE multiple. Maybe if you go 25 times PE multiple because of that higher growth rate, and as the earnings kind of scale, maybe they can grow at a much faster clip. We get to a fair value of $52, but that's about it. That's about as high as I'm willing to go for Square. And in fact, it was trading as low as $51 not too long ago. Back in November, October, it was trading at those levels. And of course, since those prices, it's already rallied 64-65%. So this right here is going to be that sensitivity grid talking about 2025 on Square. And this is again based on the assumption that they are going to be profitable over the long term and be able to execute with lower expenses and higher revenues and higher margins as well. But overall, I would give Square's earnings here a solid 7 out of 10 because they did report some good numbers. Balance sheet is fantastic, very solid growth. Cash App is growing and moving in the right direction. But the 3 points I'm taking away because of share dilution, I'm taking away because of lack of execution on the operating side and not being able to generate profits. And of course, net losses are pretty substantial at over $500 million. So eventually, if they fix those things, Square can actually become a company that can really increase in value, and of course market cap, and also grow and really battle with the likes of PayPal and MasterCard and Visa and some of those other fintech giants out there. So $76 is going to turn into a support now because we're trading above that level, obviously, and the next resistance is going to stay put at 89, close to $90 per share. But in my opinion, I think that's going to be a little bit on the high end for the valuation itself. But my fair value is going to be closer to low 50s. Maybe, just maybe I can get by, if you take a look at plus minus 5%, $55, $54, and low end is going to be $49.50. So this right here is going to be that flexibility range, plus minus 5% for Square. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Let me know your thoughts on Block and what did you make of the earnings overall. And as always, check out the Discord and the Patreon links down below. Happy investing, and I'll see you all in the next video.